Eric Muathe for the new week and for the new month, February 3rd, 2014. Here are some of the things we can look towards for direction in the market this week and also this month. If you take a look at the Nasdaq from a weekly chart, there's this line here where you'd expect either the market to find support or to find failure this week or in the coming weeks. If you take a look at the Nasdaq daily, you see that as I discussed over the weekend, we've been finding support on this line here. So that has been support and we seem to have held. So be aware that the market could conceivably also move higher because this line, which has been very generous to the market, continues to hold right there. As you can see, that's nice support. The only way this market breaks down is really if it can break below that line, which has been support over the last 13 months or so. If you take a look at the Dow, you want to take a look at the Dow weekly chart. And you see that the Dow has this support line here on the RSI based on these three lows here. So this week, remember, we closed below 50 on the weekly last week. That's why we had a big drop on the Dow. If we can recapture that level above 50, we might have a big up week. Also, keep in mind that if we continue breaking that line, this is going to suggest that this is a major high. So either we find support this week or failure. Let's take a look at the Dow daily, and you see on the daily, just like most of the markets, this is where you'd expect support on the RSI level. Why? Because this line here that I'm drawing was the nice entry point here in December of 2012, was nice support here. Summer of 2013 was support here, and you can see we are holding that line. So depending on whether we hold or not, then the direction is going to be revealed. If we take a look at the S&P 500, you see that it is trying to find support on this level here, right there, and this is where it was a buy with a breakout above that channel line, came all the way, bounced off it once, actually twice, and then here it's consolidating. So we'll see whether it's going to hold above that. Right now the S&P 500 is trading between the 50-day moving average and the 200-day moving average. So it's really no man's land. And also we'll see that it needs to recapture this line here if it's going to do well. Remember, it's been holding above this line in 2013 for nice lows and entries in the market. So it needs to hold above this general line here if it's going to do well. As you can see, this has been support on the way up during the nice rally of last year. And so right now we are trading below that line. So this might be the first indication that the market is tired after that big run up last year. Let's take a look at the S&P 500 from a weekly chart, and you can see that if you draw the lows on the RSI, we are sitting at either support or break this coming week. Now if we take a look at the S&P 500 from an hourly chart, you see that this top lines on the RSI is where it's been struggling to hold above that. And so for this market to do well, it needs to break out above the top lines of the RSI on the hourly. If you take a look at the VIX, the only way this general market continues going lower is if the VIX can hold above 18.14, which is the highest daily close here. So that's the only way the VIX can continue moving higher, if this breakout above 18.14 holds. This month, let's be very careful, because if the S&P 500 breaks below 69.10 on the monthly, if it breaks below 69.10, you're going to be seeing a big drop in February. So watch this level. It closed at 69.68. So keep in mind that could be the reason we have a big drop in February. Remember, the Dow had the biggest drop in January because it moved its RSI below 69.10, and the Nasdaq still continues having a strong monthly chart. As you can see, the Nasdaq is holding its RSI at 77.05. 0.04. So the Nasdaq continues holding strong formation and could even break out on the monthly because it has had at least 1 month of rest. Eric Mwathe, good luck, peace, and blessings.